All right, let's get right into it. We're going to try and unravel the incredibly complex world of money and debt. You've seen the headlines, you've heard the staggering numbers, but how does it all actually work? In this explainer, we're going to pull back the curtain and make it as simple as possible. $35 trillion. That was the U.S. national debt as of July 2024. I mean, just take a second and look at that number. That's a 3, a 5, and then 12 zeros after it. It's a figure so vast, it's almost hard to even wrap your head around. And that, right there, leads us to the central mystery we're tackling today. How can a country owe this much money and not just completely fall apart? Who do they owe it to? And more importantly, what on earth does it mean for the global economy that we all live in? To solve that mystery, we first need to understand a really fundamental question. What is money anyway? Because the answer to that question has changed dramatically over the years, and that change is the key to understanding everything else. For most of human history, money was a thing that had value in and of itself. A gold coin, a silver coin, that's called commodity money. But today, pretty much the whole world uses what's called fiat money. And here's the crucial part. The paper in your wallet or the numbers in your bank account have zero intrinsic value. None. Their value comes from a social agreement, a collective trust in the government that issues it. The name itself really tells the whole story. Fiat is Latin for let it be done. Modern money has value simply because a government declares that it has value and because we, the public, believe them. It's basically an order, a command, not a claim on something physical like gold. Now, this wasn't an overnight switch. The US dollar was slowly cut loose from gold over decades. But the final, decisive move happened in 1971. That is the moment the modern financial era truly began. It transformed the US dollar, which is the world's reserve currency, into a pure fiat currency. Okay, now for the part that really blows people's minds. The most misunderstood piece of our entire financial system. Where does all this fiat money actually come from? The answer is probably not what you think it is. This quote from a top official at the Bank of England gets right to the heart of it. See, we tend to think that banks are just middlemen, right? They take in money from savers and then lend that same money out to borrowers. But that's not actually how it works. So here's how it really happens. When you go get a loan for a house, the bank doesn't check its vault to see if it has the cash. It simply types new digital money into your account. That's it. That new deposit is the loan. In our modern economy, money is literally created as interest-bearing debt by private commercial banks. And the scale of this is just staggering. If we use data from the UK as a really clear example, you can see that over 97% of all the money in circulation isn't physical cash from the government. It's digital credit, just accounting entries on a spreadsheet, created by commercial banks every single time they issue a loan. So, if you can wrap your head around the idea that money is created primarily as debt, it starts to make a lot more sense why our entire global system seems to run on it. So let's connect that idea back to those massive government debt numbers we started with. The reason governments borrow is, at its core, pretty similar to why people do. They need to pay for things: public services, infrastructure, managing economic crises, and investing in future growth. But often, the money they bring in through taxes just isn't enough to cover all that spending, so they borrow to make up the difference. And this isn't just a US problem. This is the global standard. This IMF data compares a nation's debt to its GDP. That's the total value of everything a country produces in a year. And as you can see, major economies like Japan have a debt that's more than double the size of their entire economy. This is just how the modern global system works. So, this all brings us to the central debate, the big question: is this whole system of ever-expanding, belief-based money and debt a brilliant tool that fuels progress, or is it a giant trap, a ticking time bomb just waiting to go off? Well, there are two very different ways to look at this. On one hand, the ability to create money as debt lets governments invest in the future, building things and educating people in ways that can make the whole economy stronger and more productive. But the downside is, frankly, it's terrifying. If a government creates way too much money to pay its debts, that money can become worthless. And these risks are very, very real. When debt gets out of control, the interest payments alone can start to swallow the budget. Even worse, if a country just starts printing money to cover its bills, it can trigger hyperinflation. The case of Zimbabwe is a chilling reminder. They printed a $100 trillion bill, but it was worth less than the paper it was printed on because absolutely no one believed in it anymore. And that right there brings us full circle. Credit, the very basis of our entire financial system. It comes from the Latin word credere, which means to believe. That $35 trillion of debt, the money created by banks, the value of the cash in your hand, it all comes down to this one simple but incredibly powerful idea: belief. So, here's the bottom line. Our entire global economy is built on a system where money is debt, and debt is belief. It has fueled incredible growth, but its only foundation is our collective trust, which leaves us with one final, crucial question. Is this system a sustainable tool for our future, or are we all just waiting for that belief to finally run out?